mode.
Good afternoon, everybody. This is Stan and Jack. We're here to do a webinar today. Today, we're going to focus on actually two webinars. The first one is on Elliott Wave and recognizing retracement patterns. And before we get started, our disclaimer, we do webinars and we do the services we provide for educational purposes only. We provide materials here to support trader education. We hope you guys get something from this, and we are not issuing trading signals. That's not what we're about. So that's the disclaimer, and so let's go to the main page, and as you can see today, we're actually doing a couple of webinars. We're doing the first one. This is our holiday special, Elliott Wave and retracements, and then trending patterns right after this. So back-to-back webinars today. The reason Elliott Wave and retracement patterns are important is this. If you are a trader, whether you are a day trader or whether you're a swing trader, whether you trade a 1-minute chart or whether you trade a weekly chart, okay, you have to know when to enter a trade. If you understand retracement patterns, that gives you an edge in terms of knowing where to enter and also how to enter a trade, okay? And recognizing your risk. So I think that's a big part of this, which we're going to get to. So with that said, Jack, I wanted to share an outline quickly, and then I think we get started. And by the way, folks, we waited a few minutes until after the close, and we have a number of people signed up, and I would encourage questions. So the questions tab, please feel free to put your questions in there. So basically what we're going to cover today in the next hour, we're going to start with why are retracement patterns important. I kind of already talked about that a little bit. And then we'll talk about the basic concepts of retracement patterns, okay, and how to recognize them. And we're going to talk a lot about retracing in time and retracing in price, okay? It's important to recognize that corrections or retracements happen both in time and price, okay, and how to recognize that. And then we'll talk about specific patterns. I want to do real examples, zigzags, doubles, triples, 5-3-5s, triangles, and complex corrective patterns. And then how do you trade these in a trend? Okay, I think everybody here probably already understands as a trader, you know, you make your money by trading the trend and capturing the trend as much as possible. And retracement patterns may, you know, if you're trading a weekly chart and you're trading a retracement pattern, well, of course, that's an opportunity to trade. But, you know, retracement patterns are not where you make your money in trading, in my opinion. I think as a day trader, you can make money in retracement patterns, okay? But, you know, fundamentally, what I think about when I trade is I try to capture the trend. Where's the trend? And I'm capturing the trend as much as I can, and I use retracement patterns to either add to my trade, or I use retracement patterns very often to enter a trade. So that's the basic introduction, Jack. Anything you want to add to the retracement pattern thing? I think
yes. You have to be able to, it's very important to be able to recognize.
Yeah.
Okay. Am I? Is it all right? Can you hear me? Okay.
Yeah.
I think it's really important. Yeah, to be able to identify retracement patterns, because apart from anything else, retracement patterns, if you can identify that, then it gives you a huge advantage in actually picking your entry for getting back into the main trend.
Yeah.
Because retracement patterns end, and then you get continuation, and you want to be, and that continuation is where you want to be back in to the trade. So, and actually, I have a beautiful triangle to show today, which I'll show later on. But that I've worked it up. I'm doing a TLT post tonight, and it's the TLT triangle. And that's a very good example of one, which we can show today.
Yeah, absolutely. Absolutely. Okay, so let's get into some basic concepts, and I'm going to start with just the basic concept of a retracement pattern. So, you know, if we're in a bullish trend, here is a nice picture of a retracement pattern. Let me make it a little bigger here so we can zoom in. Okay, so you know this is showing actually a couple of different retracement patterns. First of all, do you see the 5-3-5? 1, 2, 3, 4, 5 for the A, 3 back for the B, 1, 2, 3, 4, 5. That's a retracement pattern. It's called a 5-3-5. Okay, they're all over the market if you look for them. Okay, so you know if you see a 5-wave move down, it doesn't mean that you're in an impulse. Okay, it could be a corrective pattern. And then of course you have a 3 back and then another 5-3-5. So this is a 5-3-5, 3, and a 5-3-5. You could see this as a complex corrective pattern, but this is nothing more than an A, B, C, or a W, X, Y. That's all it is. And we're going to look at ES because I know a lot of people trade ES, and we're in a a retracement pattern. It's a very clear retracement pattern. So that's one retracement pattern we'll talk about as a 535 and also an ABC. And let's look at another type of retracement pattern, which is a reversal pattern. It's called a flat. If we were in a bullish trend, okay, we would have two types of flats, and we have an example of this in ES, which we're going to look at in a minute. But if we had a bullish trend up to this point, and this is where the turn is, we have 3 back, we have 3 up, and then we have 5 down, okay? That's a 3, 3, 5, that's a flat, okay? And here's a 3 down and a 3 up, basically like a double top sort of thing with a 5 down. Now, the way you recognize this pattern is, of course, first of all, you can see the setup for it. This C wave is the piece of the retracement pattern that you want to capture as a trader. Okay, so for me, you know, the first 2 sequences, they're not important to me. Okay, if I am counter trend trading, okay, this is the piece that I want to capture. Okay, we've had a number of instances where we've done that, and especially in commodities, this can be highly profitable. Okay, so if you're good at spotting retracement patterns, and I don't like the counter trend trade, but you know, this is a great counter trend trade, is being able to recognize the pattern and then capturing the C wave, because the C wave tends to be very impulsive. Okay, now there's also triangles. Now triangles come in the bullish and bearish flavors, and Jack has one on TLT. There's one in ES. We'll talk about triangles as well. And by the way, they come together. Sometimes you get an A, and then the B wave is the triangle, and then you get the C wave down. Okay, so these can appear in a number of different places, and you get the idea of a triangle. It's compression. Here's a contracting or symmetrical triangle. And actually, we had one of these in ES very recently, and I'll show you that in a second. This is just theoretical. The actual practice of trading a triangle is a little different than this, of course. This is idealistic. But you get the compression in price, you get the compression in RSI, and then you get a thrust out of a triangle. That typically marks the end of a move, okay, usually. So those are the 3 basic patterns we're going to look at. Okay, and if anybody has any questions, post them, and I'm going to ask you guys some questions as well. Okay, so with that as an introduction, let's get to the E-mini. Okay, now let's take a look at a retracement pattern. Let's look at all of the legs in the E-mini here. This is a wonderful, wonderful example that we can learn from. Okay, now first of all, what stands out to you about this chart? Let me just ask you guys a question. What are the major legs or major clues on this chart that you see that gives away the structure? What do you notice? What are the big things that you notice about this without thinking about Elliott Wave or without thinking about anything else? I mean, what are the major things that stand out to you? Make a post in the questions tab. What do you notice? Lower highs, and you're talking about this area over here, okay? That's great. So lower highs is a key. That's one thing to key on. The RSI triangle, the triangle, absolutely, very good, very good. Now, the thing that stands out to me, and by the way, that's all good stuff, okay? The thing that stands out to me and what I first notice on a chart is where are the biggest moves? Okay, I'm a trader, okay? I want to know where are the biggest moves, and here is a big move here, right? I'm thinking to myself, is that a C wave? Okay, or is that a third wave? Okay, that's kind of how I think. I say, where's the biggest move? So there's a big move. Here's a big move, right? Where are the biggest impulsive moves on the chart? Here's another impulsive move, right? So I'm thinking to myself, boy, what kind of chart is this if that's the big move and there's a big move and there's a big move, okay? Because I think what you have to do is you have to put it all in context. It has to fit together. Okay, like let's talk about a flat, for example, and we're going to talk about the triangles, guys, in a minute. And both of you, Anthony and Ken, you both notice the triangle, and it's a key structure because that's kind of what we're in right now. Okay, but like for example, let's talk about a flat. Remember the flat? And I know some of you this might be new to you. Remember this A, B, C. Okay, so if you have an A, B, C, and you're at the end of the C, that's a reversal pattern, right? So, you know, here's the A, B, C, okay, of a reversal pattern. So here's an A, an A, B, C. You can almost guarantee that it's going to turn at the B and go higher. We were thinking it was going to go up this high, okay, which we were wrong about, right? Which the red circles on my chart are basically calls that went sideways and didn't go where they were supposed to. But the point here is to be able to recognize different pattern structures. So here's a three-wave move for an A. Here's a three-wave move for a B. And this is a three-wave move basically for the C. It's not a 5, it's a 3, but it measures, okay? You can measure this and it measures to a 1.618, okay? And so in a flat, for example, what you want to do with your Fibonacci's, and by the way, if you don't use Fibonacci's, trading structure, it's very difficult unless you're a classical chartist, okay, like Jack is. Okay, so this actually went through the 1.618 and almost got to the 2.618, okay, that particular flat. And that one went further than we expected, okay? We were looking for support here, if you remember. So basically what I'm trying to say is the C wave is always the largest leg, okay? Here's another example of a C leg, an A, B, this is a C. If we do our extension work here, very basically, watch this. It's an A, B. Very often, it's right to the 618. You can see that's where we're at here. So, you know, flats tend to go to the 1.618. They don't always go there. They sometimes go further. But, you know, when you recognize that, you can see, oh, here we're going to get a reversal. What a reversal that was. That was a great reversal. Okay, great thing to trade. Now, so that's an example of a flat. Let's just talk about the basics, okay? And that's maybe a more advanced flat there, okay? But let's just talk about basics, okay? Let's just talk about zigzags, okay? Zigzags are very basic. Here's a zigzag, okay? And if you learn how to trade zigzags, or if you learn to recognize zigzags, I'm going to tell you right now, guys, you will make money. Now, why is that? Because there are a lot of eyes on the market. There are a lot of eyes on the market. So when you get a turn and you get a back test, to notice where it goes to between the A and the B of the previous swing, like the X is right there. The X is right between the A, B swing, okay? That tends to be in the golden ratio zone between the 0.382 and the 0.618, and typically right around the 50% fib, okay, of this move. When you get that, lots of people get into this move, the next move down, okay? A lot of people key on that. So, you know, what I'm trying to say to you is you want to trade the patterns that are most easily recognized because there are thousands and thousands of eyes on it, okay? This simple thing right here, a three-wave move to the 100% fib, okay? And I hope you guys know what I'm talking about. I'm talking about just making a simple measurement like this structure here, okay? Very simple measurement. Watch. Here's your A right there. There's your B. And there's your C, right to the 100% fib. Do you see that? Okay. And guys, it's within, you know, a couple of handles. And so, you know, if you learn to recognize structure and just trade the market in three waves, okay, so there's three right there, for example, right? Three down to the W. Here's a three back, okay, to, and it didn't quite get to the 1.618. And the key thing about three-wave moves, this is the other thing I forgot to say, guys, and let me just share this with you because this is important, okay? The market, even though there are thousands of eyes on it, okay, I guarantee you there's a lot of size being put on here. Why? Because there are machines out there trading three-wave moves, okay? I guarantee it, okay? Because if you ever plot out the market, okay, you will notice three-wave moves, 100% fibs, and the market will at least pause there before it goes and does something else. It happens so often, right? So, and again, there's a three-wave move. I could, let me show you another measurement. Here's another one right here coming back the other way. 1A, B. It's a little tight to see it, but you can see it's almost to the 618, pretty close. And so your typical retracements, and this is what we should talk about. The typical retracements, if I'm looking at a larger retracement, like if I see a three-wave down and a three-wave back, that's just a dead giveaway. It's just a dead giveaway. It's such a simple, easy trade. You know, you just do the larger Fibonacci sequence. Here it is. And what I'm keying on is I'm keying on two areas. I'm keying on the 100% fib. Now, the point I just made a moment ago, I want you to notice what you see here, okay? Three waves down to the 100% fib. What did it do? It paused. Okay, what did it do here? It turned, okay? there's so many eyes on 100% move on the 100% fib. It is like not even funny. Okay, I mean it's so predictable. At least right now it still is. Okay, it may not always be there, and you can see what I was looking for, right? I was looking for a back test. Okay, and what did it do? It pushed all the way through to the 1.618. So my two keys for three-wave moves are very simple: 100% fib, and sometimes I do this. Okay, I'm looking for that area for a turn. That's a big area in this particular case. I typically look for that in a smaller sort of swing, but I'm looking at between the 100% and 1.236 area for a turn. Okay, and what do I see if I get continuation? So we break the low. Okay, what's that a sign of? That's a sign that we're going to the 618 usually. Okay, now notice what happened here. The 1.236, we found support and we bounced. Okay, is that a surprise? No. Why? There are a lot of eyes on these numbers, guys. I'm telling you that there are a lot of eyes on these numbers. Okay, you gotta watch these numbers. So, and by the way, even the 618 very often on the way down, you will see a back test, or I'm sorry, an impulse to the 618, a bounce, and then further movement down. So, what I'm trying to show you is that in a back test, the moves are fairly predictable. By the way, are they always predictable? No. But you can predict them, okay? And it helps your trading, okay? And without this, my hit rate wouldn't be as high as it is because this helps me predict both the timing and the extent of the move, okay? Now I have a question here. How do you determine which time chart to watch? 90 versus 5 versus 60 when looking at fibs? Is it just trading style, day and swing? Okay, if you're day trading, you can do exactly what I'm doing. I do this on a 3200 tick chart when I'm day trading, okay, and it works, okay? So it's a style thing. I know guys that do this on a weekly chart, and they put, and they're already long metals at this point, and they don't care that there's another swing lower coming. So it has to do with your account size and what you're willing to trade. So, if you're a $40,000 to $50,000 account size, you're day trading, and you're looking at a shorter term chart. Okay, if you're swing trading, you got to back out. You got to look at an hourly chart minimum. You got to look at a 4-hour chart also. And I like to look at 3 different time frames. So before I get into a trade, always look at 3 time frames and make sure you have alignment in terms of the trend. Okay, so I hope that answers the question. But these basic concepts I'm introducing, guys, they work on all time frames. Okay, all time frames. Now, Jack, do you want to talk about the triangle? And what I'll do, since the triangle is here and you guys noticed it, by the way, how many triangles do you guys see there? Let me ask you that question.
How many? Are you talking about the TLT triangle or the ES
triangle? Yeah. Why don't we get to, well, either one, whichever one you want to do. I'm gonna throw it to you in a minute. I'm just introducing the basics here. Folks, how many triangles do you see in front of you on this chart? How many different interpretations of triangles do you see there? Obviously, the one that I've
got 4.
Yeah, there are at least 3. I can easily see 3. Okay. And so the question is, since you guys brought up the topic, okay, so Anthony and Ken, you saw RSI, right? Does this RSI tell you what direction it's going in? It doesn't. Okay. So how do you know which one's right? What do you key on? The breakout. Well, very good.
For me, Stan, I generally ask you.
Well,
wait for the RSI.
By the way, that's you got to have your own method, Jack. I mean, I'm flattered, thank you, but you got to have your own method. So good, Anthony. Good answer. It's like breakout. You wait for the breakout. That's one way to trade a triangle. Now, Anthony, before the breakout happened, which was here, right? Okay, and we're getting the 3-wave back test. By the way, does everybody see the back test, right? Look at this. I'm just going to show it to you. Okay, here we go. A, B, and I know I'm maybe overdoing this, guys, trying to show this to you how simple it is. Okay, but you know what? Traders make trading hard. Okay, we make it so frickin' complicated. It's not that complicated. Okay, 3-wave move back. What do you think the chances are that the weekly pivot and that 100% fib and this floor ceiling area being resistance? What do you think the odds are that we're going to drop straight down and make a new low? I think that the odds are pretty good at this point. Okay. Anyway, we'll see what happens.
Can I show you my SPX triangle?
Hang on. Okay. And yeah, we'll do it in 1 second. So Anthony's answer, I think, is right on. It's like you wait for the breakout. You can wait for the back test, which should be in 3 waves, right? And then you get in the trade. That's one way to trade it, right? Some other hints that you want to look at is, what is the price action like? What have you guys noticed about the price action here over the last, say, 3-4 days? What have you noticed? I think Steve W. actually called it earlier today at 3:14 p.m. Steve said lower highs. Everybody notice this? Here's the highest high, here's a lower high, here's another lower high, et cetera, et cetera, et cetera. So that's giving you a hint. Okay, the lower highs give you a hint. The price action, rallies have been sold. Every single rally has been sold for I don't know how many days. Okay, so it's a hint. You're in a triangle like this, and you're getting compression, and you see lower highs, lower highs, lower highs. It doesn't mean necessarily that you put something on, but yes, exactly, Fred. And increased volatility in the rallies, absolutely. So this one here that happened yesterday that we called beautifully went right up to our number, which was the potential for the move, right? And straight through and broke through. So, you know, the other thing that helps is if you know how to count a triangle. So, you know, 3 waves up for the A, here's 3 waves down. This is a flat. This gives you a hint that that's the B. 3 waves for a C, D, 3 waves for an E. This is a hard 3, by the way. That's a tough one to see. But I think that's the point, guys, is to be able to just break the market down into the basic 3-wave moves. That way, you're putting on risk. You're putting out risk in a low risk way, if you know what I'm saying. Anyway, so anyway, that's the basics around triangles, or this ES triangle. So let's take a look at Jack's chart. And I know, Jack, you saw 4 different triangles.
Oh, on the chart you showed, yes. I mean, the currently we're working 2 main ones. It's, so, and these are this is the what I posted yesterday morning. This is the triangle within a triangle. The bigger triangle is this one here, and that may well be breaking down into a flag. And realistically, this triangle is going to force it to break down into a flag. And I've got the flag megaphone trend line here, but technically this triangle is still alive until we break on through here. But this should be on the smaller triangle. Obviously we've broken down, and Sam was calling the high stay at the retest. It actually came back and made another retest, which was a bit annoying, but it's come there, and it is just about, hopefully, to break down from this low here, the intraday low today, and that will trigger a double top to take us back to test yesterday's low and should be lower. Assuming that happens, then we break this down and we're going with the flag option. But I think that is, I've got the trend lines here, that's a falling megaphone. And this is a good example of how you can use the 2 styles of charting together. Stan's been calling this 1990s target for a while, and I couldn't see it before. But actually, at the beginning of the week, I was playing around with the trend lines here, and I found the megaphone here, and it's a perfect match. It's and these are the 2 main pattern options. It's if the triangle fails here, which it's likely to, I think, after the move down today, then we go, and this should be the support trend line, well anchored there, and this is a nice alternative, and in effect, this is a bull flag. Which actually fits very nicely in with the seasonality.
Yep, sure does. Absolutely.
Right, because these break up 70% of the time. This one, it's not actually, I prefer the triangle option, the big triangle option, and the reason was that the triangle option had a decent chance of getting us up to 2170, 2180. The bull flag may only get us to 2134.
Right.
So, and obviously it'd be nice to be able to short 2180, but you know, that's it's going the other way. All right, great. Pass back to you, Stan.
Okay. So let's take a look at what ES is about to do next. Okay, looking at the very basic stuff that we just talked about, right? Okay, so what would you be looking at next on this structure? Let me move it this way a little bit. Okay, so one of the things I would be looking at right away is And by the way, you know, the 1990 to 2000 area, this is something we've been looking for some time. When we were up here, we were looking at this area as the next major swing, okay? And you can see where we were, at least where I was A, B, looking for C all the way up here. Now, here's the thing, guys, okay? Sometimes the market corrects in time, not in price, okay? And you got to face reality sometimes where the idealistic move, which of course, nothing in trading is ever idealistic. Here's your A, here's your B, and we were looking for a number up in this area for the C wave, okay, which never materialized, okay, because what happened? The B wave here, or the X wave, so we have a W, okay, so, you know, just to go all the way back here to this major turn, right? 3 waves down for the W, 3 waves back, we were thinking A, B, C up to here. It's actually turning into a triangle. The B wave position here is turning into a triangle, so we have an A, B, and we're going to get a C lower here. So the X wave here is being formed in a triangle. So we have an A or a W, we have an A, B, C, D, E, and now we're looking for a thrust out of a triangle. So out of this triangle here, and you can draw it a couple of different ways, and there's also the triangle that Jack drew, which is larger, which is this one. It depends upon where you put the B wave. You could also draw it that way, okay? And this is how I'm drawing it right now as the highest probability one, which who knows if I'm right or not. We'll find out tomorrow. But if this is a triangle and we're thrusting, okay, so here's what you do. Number one, you can measure this triangle a couple of different ways, which I'll show you in a moment. But the main thing is to look at your basic 3-wave move. So here we go, A, B, and I'm looking for C. Now where am I looking for C? Down here, the 1.618 1993s. I'd like to see it there, okay? And I've been calling 99, so I'm adjusting the target a little bit lower. Now, would I be surprised to see this pattern, okay? This is what often happens, and it never always happens, guys. You get to the 618, you see a 50% back, okay? Then you get a move, and it goes to the 100% maybe, okay? And then you get the entire 3-wave move retraced back to the A-B swing. You see the A-B swing? The number of times that this happens, it's like amazingly predictable. Look at this D-E swing. Where do we go back to? Right into right into the middle of it. So going back into the previous swing is very common. And then, by the way, I'll be a genius if it actually works exactly like this, right? It won't, I promise you. And then we would get that move. So, you know, if I'm thinking in threes, that's what should transpire, okay? And, you know, that's just how to think about it, okay? So look at the 618, look at the 100%, look at the 1.618, and that's it. So, you know, right now we're in sell rallies mode. We've done the back test of a triangle. And this is the thing, and I've spoken about this many times, and you never see it if you look at an idealistic picture of a triangle, right? This thing. That doesn't help you trade. It gives you the concept, right? But triangles, the number of times you see this where you get the break and then the 3-wave move back and then it goes, it's so common. It is just so common. It's amazingly common. Commodities too. So, you know, this is where if we are doing a triangle breakout, we should be heading down here. Now, how do you measure a triangle? So let's just talk about that. And by the way, I don't like triangle measurements. I think they're very, very inaccurate, okay? So I would take the A wave and I would measure it this way, okay? A wave all the way down to the extension of this wave. Do you see what I just did? And then, of course, we take the breakout, and let's see if I can grab this. Okay, come on now, let me grab it. Oh, geez. It's not gonna let me grab it. But I would grab that and I would pull it over to here, and I would do this. Let me just do it this way. Okay, so there's the lengthened ticks, 326 ticks, right? Okay, 326 ticks from here, from the breakout, 326 ticks. This shows potential. It doesn't mean we're going to go here, guys, okay? It just shows potential. If that is the triangle, it shows potential for it to go lower. 326 ticks. Well, isn't that amazing? Okay, now do you know what this number is? 1968. Okay, that is your ABC, which is your W, X, and that's your Y right there at 1968. Okay, so we have potential to go to 1968. Okay, just keep that in mind. If this is a WXY in a three-wave move on a larger scale, okay, that's what we're going to see. So we have a three-wave move, and let me just summarize, okay? So on a larger scale, we have a WXY to 1968, right? Okay, so that's the largest scale. We have here, just to form the W, a three-wave move, okay? Just to form this W, we have a three-wave move. Just to form this sequence here, we have a three-wave move, A, B, C. Okay. By the way, I could get more finite. Even right here, we have a three-wave move. So, you know, depending upon the level you trade at, you can trade this at a micro level. You can trade this at a nano level. You can trade this on an hourly level. You can trade this on a 4-hour level. Okay. So get used to looking at swings in threes. I think that's the main message here. Okay. So, Jack, do you want to look at the TLT triangle as another example of a retracement?
This is a lovely example.
Okay.
So I'm posting this slide on a post at the charts talking about bonds.
Okay, throwing it back to you. Let's see your take on TLT.
Now, this was I was just asked for a couple of times from subscribers. So I've had a look at TLT, and Stan was talking about this breaking down this morning. I'd really like it to break up. I'd really like a retest of the highs and then fail, but it's not going to. And I was having a look. I pulled out this diagram from the patternsite.com, very good Bulkowski site, of course, and this is a diagram of an ideal descending triangle in a bear market. Now, of course, this is bonds, so bonds are in a bear market, and if you look at it, it comes up A, B, C, D, E. All it has to do is break down.
That's exactly it. I love it.
Yeah. This is really a textbook declining resistance. Sorry, declining triangle in this context, and there's 64% odds it breaks down. I think, given this particular structure in this context, I think that's probably higher than that. And if we break down, it's going to get us to the 109, 110 area. After that thrust finishes, which isn't necessarily in the 109, 110 area, obviously it could go lower, then you'd expect a full retracement, and that hopefully would deliver more of a move up. Because we really need a bit more action up here, I think, before it's ready to go down seriously. Although, you know, it may be that the next low and this high will give me a better pattern to work with on TLT. So, but this is a beautiful example. So I'm going to be posting it tonight and calling it short. Realistically, this is a short entry level.
Yep. And your risk, and this is the other thing I want to go back to and talk to just a little bit, is if you trade these, right, and you're looking for an entry, well, this is not a bad place to enter, right? You're on the trend line, right? Where's your risk? Okay, so the risk is the previous swing high, which I can't really see the number, Jack, but it's like 122.50-ish. There's also
this is which one are you talking about? This one?
The E wave, I think, is
okay, that's
120. Is that what it is? Okay. I don't want to give the wrong number so people make a mistake. Okay, so you know, if I'm trading this, I'm getting short and I'm putting a stop above 123.04. Okay, so that's how you trade a retracement pattern. You wait for, like this one, you could have gotten in at the E wave if you wanted to, right? So last night we called the triangle on ES and we said, you know, get in at that level that we just talked about, you know, up to 81s or so. And, you know, that's where resistance was. So you wait for resistance to manifest first before you put any money on. And then once you see the resistance and it proves itself to you, then you put your risk on and you put your stop above and you let it play. So, you know, if we do break above 123.04, Jack, you might get your wish. We might go and put in a double top at 127s.
Yeah, and on breaks up, these tend to be pretty reliable performers. But I think the odds have to favor it breaking down. Yep.
And I think the key thing here, guys, is look, we can look at patterns and we can say, hey, the percentages are, like Jack said, 65% down. But you know what? We're all human beings, and sometimes it goes the opposite direction. So you got to know where your risk is in a structure. Okay. So you got to know, where does the pattern invalidate? This pattern invalidates at 123.04.
Yep, that's a nice easy level to short against.
Let's. I have a couple of questions, Jack, that I want to go back to, but I'd like to show the ES stuff because I often skip over where do patterns invalidate, and so
okay. I'll throw you back.
If I could talk about invalidation for a minute, because I think it's a very, very key concept. Okay.
Okay. Shall I throw you back the chart?
Yeah, please. Okay. That'd be great. Okay. Okay. So here we are on this swing down. Okay, and we get the turn, and we get a double bottom. Okay. And you can say to yourself, look, we have a double, if you're a classical trader, you can say we have a double bottom situation, so we have a target. And if I'm trading this classically, okay, I could do this. This probably won't work. It won't. No, it's not going to work. I don't have it set up for that. But you could do a back test here, and you could say, look, I'm going to get 100% of this swing from here to here. The largest swing right there is 67 ticks. So I should get 67 ticks from here higher. And that's my trade, and that's my plan. Okay, and let's just take a look at where 67 ticks is. So I'm going through what I go through. I look for the plan, 67 ticks. So the trade has a double bottom potential of 67 ticks. So there's a classical analysis, and right about there is what I'd be looking at as a potential target. Okay, or I can do the three-wave move stuff that I've just shown you. Let me just get rid of this so I can just kind of share this with you. Okay, or I can do the three-wave move thing, right? So here's an extension, and by the way, you guys, you have to learn how to use extensions. I think it's probably the most useful trading tool because it helps you size up a trade. Now I know you can't see that. Let me just expand the chart a little bit so we can work this a little bit. Okay, so I've just expanded the chart. Here we have a simple three-wave move ABC. There's the 100% fib right there. Now what I would be doing in terms of planning this trade is I would be saying, right there is my area between the 100% and the 1.236, simple three-wave move. So we get the double bottom. I say, what's the potential for the trade? That's the potential for the trade, okay? Now, where do I set my risk? How do I know that I'm wrong? So what's my risk on that trade? We're right here at this floor ceiling area, okay? And we know that it's a floor ceiling area. So what's my risk, guys? Who wants to tell me what the risk is on that trade? Where would you put your stop? Hopefully you can see the numbers. I apologize if you can't. $71. If you're here and your risk is 71, your stop is up here. You see what I'm saying? If you're here right at this blue line, if you're here, I'm sorry, let me make it clear. I'm sorry guys, I'm pointing and you may not be able to see. If you're in that area and you can say, hey, there's a double bottom here, this is a possible ABC formation back test, right? Where do you put your risk? If we're right here, and let's call the level 65s, I'm at 65s or 66s. Very good, so 62s. The previous swing low, that's where you set your stop. Okay, maybe you give it a half point or maybe you give it a whole handle, whatever, Wayne, in terms of where you want to set your risk. So you're risking, let's say you set your stop at 61 and you're at 66, you're risking 4 handles. What's the reward? Okay, look at the risk reward. I'm risking 4 to make what? Up into this area between 82 and 86, right? That's a pretty good risk reward. So that's what you need to be doing as a trader is first of all looking at risk reward. And where does this invalidate? And Wayne, I think you already said it, it invalidates at 62. Your theory or your thesis invalidates there, right? Now, what gives me confidence in this trade? What would give you confidence in that trade, guys? What do you see in the structure here? Let's say we don't see any of this stuff here, on the right. We only see from where my crosshairs are to the right. I'm sorry, to the left. We don't see anything else. All we see is this. What gives you confidence? Let me move this a little bit left. What do you notice? Previous support. So previous support here, Wayne, is that what you mean? Okay, there's previous support here, and there's previous support here, and there's previous resistance here. Okay, so, look for support, resistance, and that's one thing that should give you confidence. What else gives you confidence? Look at the price action. What do you see? What gives you confidence? We're here. What gives you confidence? What did we just come out of? We just came out of this right here, a whoosh, right? So we get the back test, we get a double bottom. I would expect the C wave. I would expect an A, B. I would expect a C. That's a great trade. That's a great trade to get in. So, you know, when I'm trying, and it's a higher high. Well, that's the higher high, yeah. But you know, here we are, lower high, lower high, lower low, lower high, lower high, lower low. Okay, here's the first higher low that we've had, right? So there's another signal that we should be moving in the opposite direction, okay? So what I'm trying to say is this: before you put risk out into a retracement structures are not easy to trade, okay? Make sure you have some things to give you confidence. Just don't be a dumb trader and say, I'm just going to do ABCs everywhere, okay? That's a surefire way to get your ass in trouble. It will, okay? So here I'm looking at signal number one, and I'm just trying to give you the example, just to give you the example, okay? Here's the A, B, C. I'm at 100%, right? I see the bounce, I miss it. We come down, we back test. The back test is always a lower risk entry, right? I see my risk is 4 handles. I see the previous support, as you guys have pointed out. I look at my RSI. What does my RSI tell you? My RSI doesn't tell me much at this point. It breaks right there. Okay, so that tells me that the RSI price cycle is gone and we have more upside coming. That doesn't really help me so much with this trade, but you know, I see this dip, this drop, and this stops right here at the previous low. Okay, so that tells me that there's resistance there. You know, there are a number of things in the chart that you can see, and what you need to do in your mind is you need to build a case. And if you see a lot of things building up, it's like we got the previous support and all the things I just mentioned, then you put something on. Okay, so even though I'm talking about retracement patterns here and ABCs and looking at the market in a very simplistic way, you still need to look at the price action and sort of build your case as to what is it that I'm trading? What is it that I'm trading and how do I trade it? I think that's very, very important. Okay, so I just wanted to mention that. So invalidation here is 62s. Okay, where does it go back to? Okay, let's just take a look at retracements very quickly. Okay, look at where it goes back to. And a lot of people do this, right? Right to the 50% fib. Okay, so very often I'm looking at when there's a turn and there's a 3 back move, 50% is so often hit, it's unbelievable. Okay, so look for that as a turning area. By the way, that overlaps with this area, the 100% to 1.236. Guys, you know, right there I'm light. I'm very light. Okay, I break above this high, I'm taking off a third. When I'm up here, I'm trailer size. Okay, when the turn happens and we break below the 100% fib, I'm out. Okay, and hopefully I'm going the other way with this trade because I see this as an impulse, 3 back. What would you think about next? I would think about a big drop, right? So again, retracement patterns can be profitable, and I think you just got to have a sense for where does it invalidate. Now, let me talk about the invalidation on the other side. Let's say that we're trying to get short because we see this as a 3-wave move. We're looking for a 3-wave up move, and we're looking to put short legs on, right? So where do I enter? Do I want to enter here at the 100% fib? Well, yeah, if I see resistance, I would put something on and I would let this play. But you have to remember something. If you're putting something on at the 100% fib without waiting for a lower high, okay, you could go all the way up to the 1.618. So if I put something on at 82s, I have to have the stomach to handle a 91.5 hit. Okay, because this could have gone all the way to 1.618, all the way to 91.50. Okay, so you know, watch the price action, watch on a lower level chart what's happening here. Okay, and so if there's an impulse higher, you know, I can add up to the 1.618. We get a break above the 1.618. We're wrong. We're wrong. Our thesis is wrong. Get out of the way. Okay. Usually this works so well, 3 waves back, or you could wait for the lower high. Do you see a reversal pattern here? The head and shoulders, right? So you could have waited for this as well if you wanted to, and you could have still caught a great move, okay? So I know it's easy to look back at structure, but sometimes to teach it, the best way is to is to look at it. And Wayne, you know what? Wayne just said the hardest part is interpreting the wave counts. And the thing is, it comes with practice. Okay, it comes with practice and doing it and getting it wrong and doing it again and getting it wrong. But look for threes, guys. Threes work so well. It's just amazing, and it's simple. Okay. Okay, 2091 is the 1.618 is the draw from 62 to 72. Okay, let me do the draw for you. Okay, I think Anthony, you asked me a minute ago to do the draw for you. Okay, so this is a skill set that's important. So you see the three-wave move, you see a reversal pattern, you get a double bottom, right? So the three-wave move draw is you start at the A is there. Okay, you do the draw to the highest point in the B wave, which is 78.75, right? Then you do the C down. Okay, so on my chart, this is an A, B, C, D. Okay, I'm not trying to confuse you, but that's it. It's and in an Elliott wave, it would be an A. Here would be your A, here would be your B, and that's your C, and that's how you get your 618. Okay, so that's the basic draw. Okay, and again, you look for your 100% to your 1.236 area. That's your high probability hit area, and sometimes in a C wave like this, if you get a large C wave like this, you get the 618. You see the 2010 here, Anthony? That's your A, B, C down to 2010. Okay. So, folks, I hope this has been useful. I wanted to give you sort of a big picture introduction. I think what we've done is we've covered all of this, really. I haven't talked about triples. And what a triple is, let me just talk about a triple real quick. They don't happen a lot, but they happen. And a triple is nothing more than an ABC, an X wave, an ABC, an X wave. Well, I tell you what, here's an ABC, there's the X, here's the X, here's an AB, an ABC. Okay, you could interpret this as two swings. Okay. An X, and then another ABC. So basically a triple is nothing more than three ABCs tied together. That's all it is. So that's the only other structure we haven't talked about. Do you guys have any questions about three-wave moves and retracement patterns? And what we've just talked about here are correcting in time and price, the basic concepts in terms of flats, zigzags, doubles, triples, triangles. We haven't really talked about complex correctives, but to be honest with you, this is a complex corrective. That's an example of one. Okay. And so any questions that you have, we have just about 10 minutes left. And Jack, anything else you want to add? Because I know I've been more or less leading this one. I think you're going to more or less lead the next one.
Yep. No, that's good.
Okay. Fred has just asked a question. The most profitable setups to look for. Fred, you want to look and hunt for a C wave in a retracement. Okay, so that's what I look for. These little squiggles don't get me excited. Okay, they don't. I see a major turn at 100% fib. I'm thinking, okay, I'm getting ready. Okay, here's the three-wave move back to the 50% fib. Now I'm excited because I know what happens next. There's a C wave. Okay, look at the C wave there. Here's another one. Okay, the easy setups: 3 down, 3 back. Okay, expanded flat. Okay, and then I'm excited. It's like I know this is coming. Okay, so trading every move and trading every turn, guys, it's dumb. It's really dumb trading. Okay, wait for the setup, and wait for the C wave setup in the price action. That's what you want to look for. Where's the next C wave on your ES drawing to the right? Okay. If, and Fred, I just want to be cautious and say this, here's your A, here's an A, here's your 3 waves back for the B. So what should happen tomorrow? We should get a move. We should get 2021. Okay, that's what I'm looking for, is a break of this, and 2021 would be a potential target. So the trade has already passed. The trade today was back here at 65s, which has been what? And this is why you have to use multiple techniques, guys. This has been a floor ceiling area for over 2 months. Okay, if I go to the left, you'll see multiple areas where it's resistance, where it's support, Here's resistance. Am I surprised we hit 65s today? No, I was expecting this today, okay? But here's the three-wave move. We hit the area we were looking for. Here's the back test. There's your three-wave move. So we have an A. Here's your B. If I'm right, and by the way, it's always if, because my invalidation here would be this 65 area, okay? So I'm putting out risk here, and my stop is above this high, okay? So the better trade would have been to put it on up here and to hold it. That would have been the trade today. Okay. Hey, very good trade, Fred. Fred's short 64. Fred, hold on to that trade, buddy. I think that's going to turn out for you. Okay. Yeah, absolutely. David, usually, where does a move begin from the A? You're talking about this A right here, David? Where my crosshairs are right here, David, is this the A that you're talking about? Usually, where does a move begin from the A? Could be, okay. Here's what I look for, okay? First of all, this is a floor ceiling area, right? And we have a three-wave move to the 100% fib. Now, I want you to notice RSI. What does that tell you right there? Okay? There's no divergence, okay? On an A wave, David, there is no divergence. Okay, A waves traditionally have no divergence, okay? So that's not a C wave, that's an A wave. That's how I would distinguish it. So a lot of people would say, okay, we've had an A, B, and here's the C wave. Well, that's probably true. That does look like the C wave. The character of a C wave tends to be a dump like that, or a rally, okay? But right there, we're at 100% fib, and right there, we're at a low in RSI. That's a giveaway. That's a dead giveaway. And by the way, am I trading this back test? No, I'm waiting. I'm waiting for the three-wave move, and I put it on up here, guys, and I'm holding it, okay? And I'm letting it go, and it's going to go at least to the 100% fib, right? Which is here. There's the 100%. Oops, sorry. Yeah, that's the 100% fib. So it's going at least to the 100% fib, which I marked, right? And I was looking for the back test, and I was wrong, and we went right straight through it to the 618. So, you know, that's what happens. Other questions? Okay, everybody, we're going to switch webinars. Thank you for attending. I hope you found this useful. We will do something else based on interest and feedback. How did this go for you guys? Just give me a sign. Is this kind of stuff you're looking for? Okay. Thank you, David. Okay. Very good. All right, if we're missing something here on these retracement patterns or whatever, yeah, thumbs up. I think the thumbs up is good. I just need to know if we're hitting the ball or not, okay? So if we're hitting the ball, good. So I'm going to shut it down, guys. We're going to jump to the other webinars. So if you're joining us, see you in a bit. And Jack, thank you so much.
Likewise, Ted.
All right, take care. Bye-bye.